David here, CEO and founder of the Freedom Founders Mastermind community. Can you outpace inflation? We are in a new generational or secular cycle right now. We've had 40 years of disinflation and lowering of interest rates, starting back in 1980 when mortgage interest rates were in the double digits. The Fed funds rate was up to 20%, and we've seen over 40 years now a downward tapering of those interest rates, along with very, very low inflation. Disinflation is really what I call it. We are turning the corner. We've turned the corner from really a little over a year ago to a period of time where inflation is ramping up. First time in a generation and a half where we've experienced that in this country. And that's a total different dynamic. One has to look at what are the returns when we have to factor in inflation. So looking today at where we are right now, inflation based on the CPI is running right at 8.5%. Now, my question marks are, is that really a true number? That's what the government reports. I would say you typically need to multiply that number by 2 because the numbers, unfortunately, are manipulated. So really, that's probably running about 17%. But if we still just use the 8.5% that the government reports, and we are at a point in life where we need to take a very conservative approach to our investments. So we need to get out of the stock market. Typically, that's what financial advisors will tell you. We need to put you in bonds or treasuries, which today might pay around 1.5%. So if we look at the rate of return of 1.5%, but we have to factor in the rate of inflation, in this case 8.5%, our real return in this case is a negative 6%. Negative 6%. That means every year we're going backwards. Another way to look at this is what I call the rule of 72. Rule of 72. What that means is that you take the rate of inflation, the loss of the purchasing power of the dollar, and you divide it into the number 72. So we'll take this number 72. Let's just use a nominal rate of inflation of, let's use 8%. 72 divided by 8 equals 9. And that means it takes 9 years for your money to have or go half a value. So if we had $1 million nest egg, 9 years later, 9 years later, that would be worth, in purchasing power, only $500,000. You plug in whatever number you want to. If inflation stays high and you believe, as I do, that the CPI is not true, maybe the real rate's 12%. That means every 6 years, that 1 million decreases to $500,000. Now, if you believe, as I do, that we're going to continue to see inflation run at some rate going forward, maybe not as high as the CPI rate of 8.5%. Maybe the Fed can get it down to 4 to 5%. Again, I think you have to double that. So now maybe it's 10%. That means every 7.2 years, that $1 million nest egg, whatever yours is halved every 7.2 years. How do you keep up with that in an environment where the cost of everything continues to go up and your investment strategy has been based on the long game of a financial advisor saying, well, we need to get you into bonds and get you into more conservative equities that are going to return you maybe an average of 5 or 6%. Well, in that case, you're still not breaking even. You're still going backward in time, and that's not going to suffice for you to have a lifestyle that you were depending upon after all the hard work and all the years you put into your practice, your business, saving hard, putting money into the stock market, 401ks. Today, more than ever, you've got to be your own financial advocate. You have got to be in the forefront of how to determine how your money is invested. You've been good at making money all your life, but keeping it and then maintaining it and having that money work for you is something that most people don't spend any time on because there isn't time. And besides, everybody says you can't do it yourself anyway. Let us do it. Let the professionals take over. Professionals haven't seen the markets that we're going through right now. You've got to be in a place where you can be on the forefront of what you're doing with your money. That's what we do in Freedom Founders. We bring the best of alternative investments and then have a collective wisdom community that slices and dices and underwrites and does due diligence to determine how we go forward with our money. I've been doing this for over 4 decades. I've gone through the cycles. I know how real estate works. If you've got a better plan, go for it, but understand you need to have a plan. Without a plan, you're abdicating your future financial to folly. In other words, don't know where it's going to land. That's not what you signed up for, I'm sure. Remember, it's your freedom. Stay focused on it.